Okay, so this is how you would actually trade the 1 minute chart. A lot of people like to go down to the lower time frame, especially if they're early on. It's a classic beginner mistake. They want to see more action, more setups, and they certainly get that. The problem is there's a lot more noise. So you need to be aligning the 1 minute with the higher time frame pairs. So the 1 minute goes with the 15 minute and the 4 hour. All right. So if you want to be trading the 1 minute chart, you need to be ensuring that the context of the 4 hour and the 15 minute are aligning. And what do you want to do? First, you want to look for the sweep, the liquidity sweep that closed back within the range. We've talked about this before. Okay, this is a candle 2. This should be happening from a point of interest. So it might be a previous session low or a high or a previous day high low. It could be higher time frame fair value gaps or current time frame fair value gaps. Once you get this, you go down to the 15 minute. And then you just look for the exact same thing. You want to see a sweep of the previous candle liquidity, this sweep happening in a point of interest, creating the candle 2. Now we're looking to trade what? The candle 3. So what would I want to happen? Well, the 50% of this candle, technically it would be the wick. There's a very large wick here, so I would use the 50% of this wick. The 50% of this should hold on the next 4 hour candle, all right? And it should be expanding back this way. So I don't want to see, of course, the body be closing anywhere below the 50% of this. You then do the same thing on the 15. Once you get the 15 and you're about to go down to the 1 minute, you know that I need to keep the 50% of this candle in order to get that expansion higher. All right. So we would open here. I would want to see the wick get created somewhere. Okay. Which is what I would be looking for on this 1 minute. And then we would be trading the candle 3 expansion. Okay. That 1 minute, you're going to be looking for some sort of order block or change in the state of delivery. That would be showing you that it wants to go on that continuation. Okay, so now we'll jump into the charts. I'll show you some examples of how this plays out in real time. Okay, so we are on the 4 hour time frame now. Okay, and this is again where it starts. You want to trade the 1 minute, you got to start somewhere, and we're going to start on the 4 hour. Okay, so as you can see, we get this obvious. This is actually an engulfing candle. Not only is it engulfing, but we also actually got an order block delivered there. So you get this sweep of the previous candle. We close back within the range. We actually engulfed it. Okay. So once I see this, I can now go down to that 15-minute time frame. So first I want to do what? I want to mark the high and the low, and I want the next 4 hour candle to respect this 50%. If it doesn't, then I'm not going to be entering trades. So now we're down to this 15, and we need to be looking for the same thing. So this was that 50%. And again, we're on the 15-minute. So it's fine if we get up into this OTE area. It's the higher time frame bodies that we want to stay underneath the 50. So let's see what happens here. And as you can see, immediate strong rejection up. We get into this order block here. And honestly, I would want to see the 50% of this hold. If we start closing above this, then all of this would be canceled out. I would start looking for continuations higher. Or if we see this get inverted, this large bearish fair value gap get inverted, I would start looking the other way. Okay, but what do we get? We get that candle too. So we go up. And again, we're in this nice OTE area. We go up, we get rejected out of this. We get this candle too. So now we can go down to the 1 minute first. I want to mark out this candle. And I know it's getting a little bit messy, but again, we have overlapping stuff going on. As you've heard in past videos of mine, that generally points to important areas. And again, did this happen in a point of interest? Yeah. We went up into this order block here, right around the 50%, got strong rejection. We're still getting rejection from this bearish fair value gap. Although we are high up in there, we're at that OTE area. So we can go down to the 1 minute from here. And now we want to start looking for those changes in the states of delivery. All right. I'm going to get rid of the higher. the 4-hour one for now. And as you can see here, we have this old, as you can see here, we have this fair value gap. All right, we have a few, any overlapping ones. What do? We just create one big one. What did we also do? We rejected off the 50% of it very nicely and swept this liquidity here. This is a lot of overlapping confluence for a move lower. I am now going to start looking for shorts. And what would I want to do? Well, what made this high? Let me get rid of this. What made this high that got the rejection? These two green candles. Did we close through that? We absolutely did. So technically, I could go short here. What would I do? I would put the high on this high. Okay, if we go above this, this is the whole trade is invalidated. We're going to go down to R. Does this align with some sort of liquidity? Well, where would we be seeking first? We would seek this. We would look at this. We would look at this. We'd also want to be careful. This is, the 50% of this area. You might get rejection here, and we happen to actually line up with that pretty well. So this is fine. If you wanted, some people might want to wait. They might want to wait for a close below this just because of this kind of overall choppy accumulation area. They may want some more confirmation and they may want to get a close under there. It's totally up to you. I would be fine with this. I might want to wait the next candle, hope for a little retracement. So try and get in on the wick, somewhere maybe around here. I mean, I think when we're down on the 1 minute, it's not that important. So let's see how this plays out. Again, that next minute, you would have gotten a much nicer entry. And again, this is the importance of being patient. And then what did we get? This is a candle too. We dipped up into what made this high, exactly what we talked about. All right. And if we were to take the 50% of this, as you can see, we're going up and we're getting rejection from that. So we have a candle two. I would again, I'd be good here. And then that candle three closing down. You get this retracement. What did we also do? We swept all these lows. A lot of people would go break even here just because you absolutely could continuation higher here. We swept these lows. This becomes a risk-free trade. Okay. Some people may want to do that. We swept that. Break even actually still would be in play here. Okay, we just got wicked out there. Let's see if it would have played out if we kept our high where we were. So for the other people who didn't go break even here, and you would have gotten that. Okay. So there's one. Depending on how you dealt with that trade, everybody's going to do very different things here. This is completely up to you and how you want to manage your risk in this trade. Okay, but there's 1-2R again. I mean, I would just be looking for this. You could have actually bought in more here. You have this bearish fair value gap. We go up, we sweep in, create a candle two. You want to buy more in here and seek this low. I wouldn't hate that. And you get it. So now we cleared this one. So what would be the next drop? These. All right. So there's the first example. Let's get into another one. Okay, so the second example here is really just the continuation model. We would be looking on the higher time frame, right? This is where we got that short up here. What are we currently doing? We're trading into this fair value gap. We have overlapping, so we create one. Currently sitting right around the 50% here. We have a candle two that happened there, meaning we can actively go down to the 15-minute. But I'm going to first answer a question that may be on some people's mind. You should pause the video here and see if you can see what that question may be. So the question is why wouldn't I have used this one? Because this is also a candle two, and this also got rejected from the fair value gap. And as you can see, if I did use this one, there's a chance that we would have gotten stopped out depending on where your R was. I mean, to be fair, we actually swept that, so this probably would have been still a 2-hour trade, but I would not have used this to begin with. While this is a candle too, I really don't like this closure. The body still being this high up, I don't see enough rejection here where I would feel confident using this as the indication that we're ready to move on with this continuation. This I like better. It's a clear rejection, clear reversal candle. So I would rather use this one. So we would then take, I would only use the wick in this case because it is a large wick. And I would want to see the 4-hour hold here. So we'll go down to the 15. Okay, so this 15-minute, and as you can see, this large move down, you could actually go right to the 1 minute from here. Why? Because this is also a large candle too. You close through. Technically, you don't close through this, so a lot of people would want to wait, but this you could technically go down to the 1 minute from here, and we can just do that. I'll show you an example. Let's see if it works. We have clear draws of liquidity below us, where this looks interesting. We have it here, this, and then again, you would continue on lower here. Bottom one, external range, there. What would you do? If you're right down on the 1 minute, what made this high? This long leg. Okay, so that is a large stop loss you would need to wait for. We would wait for a close below this. Some people may want to wait for a close below this. I don't, it's not necessary. So we would wait, and we get that. Okay, we get the close below here. Now, what did we also do? Well, we swept this first liquidity, and we came really close to this one. So, if this wasn't there, I would be a little bit skeptical of this candle. All right, because we do get a strong rejection from here. If you wanted to enter short, this would be challenging. And it would be challenging again because of how large the stop loss is. Somebody may say, well, why wouldn't you pick this? And it's because this is why so many people actually get stopped out. And it's because they're using the wrong time frame to set their stop. I want to use the 15-minute, which is this. This is actually the high that is protected. And I would need to go 2R from here. We're pretty close, 1.8 there. So you'd set the 2R. You'd want to see how price reacts to this level. I mean, ultimately, you want to see how it reacts to all of them. A lot of people, once you clear here, would likely either move their stop loss to here or break even. Some people who don't want to enter here may want to wait for that retracement higher back into this OTE range or that 50% area. Also completely reasonable. Okay. And this is why there are so many ways that you can trade this market. It is all dependent on what works for you. So let's see what happens. You're getting that retracement. You get a candle 2 here going back down. Now we're accumulating. So this is where you don't want to be stuck until then. Okay. So we accumulate for a little bit. You get this one last try up. We get rejected. And again, this is where I think it's completely reasonable. You start moving your stop loss, where this is somewhat challenging. You could, I guess, move it up here again. You could go break even because we've swept these two places of liquidity. A lot of people are going break even here. It's completely reasonable. If you don't want to go break even, I would absolutely not put it above these fair value gaps. Why? Because if we close above that, we have inverted them. And an inverted fair value gap in this position would not be bearish. That would be bullish. So putting it there would be reasonable. Again, putting it at break even would also be completely reasonable, especially when you have this, this is a lot of momentum going down here. Let's see what happens. And as you see, we get it. So this is how you would use, again, in this case, we actually skipped the 15. Again, if we went back to the 4-hour, that initial candle, remember what we said. We wanted the 50% of this wick to be respected. And look at what the next candle did. We didn't even come close. The 25% is actually where we got rejected. Okay, showing strong bearish. We just cleared that. Again, next stop is where? Here, which makes sense if this is a continuation anyways. And let's just see if it were to happen. Yeah, I mean, in that candle, we clear it. All right, so that's another example. Let's go to one more. Okay, so let's look at gold because this does work obviously everywhere. What do you see here? We have this bearish fair value gap. We are in a active downtrend. Okay, bearish. So we'll go with the trend here. We have this bearish fair value gap that we're getting very strong rejection from. This is the 4-hour candle that just closed. Is this a candle 2? The answer to that is yes. Not only is it a candle 2, it's a strong one. Why? We just swept all of this liquidity back here, okay? And then we closed back within this range. So I want to see the 50% of the wick, because that is a large wick, get respected by this next 4-hour candle. All right. And also what you're going to notice here, we're going to go down to the 15-minute, which is the same thing that actually happened in the last example, where you can go right down to the 1 minute technically. Why? Because the same thing happened here. Like this wick that created the candle 2 in the 4-hour also created it on the 15. So you could wait for closures below here. And let's mark out where we would be seeking. This is very strong liquidity down there. And then again, we would ultimately be expecting a continuation from here. There's also some resting liquidity here, as well as this fair value gap. Okay, let's make this green because that is a bullish fair value gap. The 50% of that has been respected, as you can see. We created that liquidity here. Now this is challenging. Why? Well, because that is a massive stop loss. Okay. So this is honestly not something that anybody should really go in. Because if you were to go down to the 1 minute, this is once again a really large stop loss. So you would need to do this, that, you're at 1.6, which is fine. There's plenty of profitable traders at 1R, 1.5R, 2R. So this is reasonable. Although this would be not a good trade. You would want to wait because we actually haven't even closed below this yet. This would be better. Okay, so now you could actually enter. Why? Because we created a new high. We created a new high, and what was that? These candles here, we closed below it, as you can see. So your entry could now be here. And if you wanted to make it like real tight, you could do something like this and go for, this 1.9. If you really wanted to do 2R, that's fine. You just need to be very careful how price reacts to this 50% in this liquidity. We've already used this 50% numerous times. So this is weaker, should be weaker unless you've had a lot more buyers stack up over the time. But this could also be a valid trade. Okay. So again, we're skipping the 15. We waited to avoid this massive stop loss. All right. And we have now used this. And let's just see if it works. And we get that. So there is another example of this working, actually from the 4-hour right down to the 1 minute. As you could see, you also could have skipped the 4-hour in this case, just on the 15-minute, drop down to the 1, and it would have worked out. So because the last two examples, we've skipped the 15-minute completely, I'm going to do one more example showing just a more clean, not so big movements. Okay, we're going to do one last example, and this is gold again. As you can see, what do we have? We have a candle 2. We sweep the previous candles. In fact, you see a lot of sweeps back here. And then a close back within the range. So what would we be looking for here? Well, the liquidity would be somewhere in here, this gap area. In fact, we'll just go down to where the low already happened. Somewhere in here. And then there would be, internal range liquidity on the way. So we have this. Let's mark out, and I would use the wick here. Again, it's a large wick. So we'll use this. We want to see the 50%. We want to see the next 4-hour candle respect the 50% of this and continue lower. Okay, so you see the 4-hour is marked out. This 15-minute is what we want to see get respected. And now we're just looking for that same signature setup. Unfortunately, we don't have a candle 2 here, although it is almost it's close to an engulfing candle. Be interesting to know if there was SMT here with silver. Uh, then this is where you would start using SMT as confluence. I don't use SMT as this super important, necessary thing. I use it contextually. So I would wait here, see what happens. And okay, as you can see, what do we get? Absolutely candle 2. Okay, we went up, we got OTE, rejected perfectly off of the OTE, by the way. Body would obviously be continuously respecting this, even on a higher time frame. Okay, so then we would mark out the 50% of this candle before going down to the 1 minute, and we would want to see the 50% of this hold. All right. From a higher time frame value perspective. But if we start to see like all of these, for instance, fair value gaps start to get inverted, we start closing very well high up into here, I would certainly not be entering this. So I would want to see some sort of now close. Here's the 50%. So I would want to see some sort of close before here prior to entering short. We're getting up into the OTE area. Okay, still up there. And again, this is what a lot of people have struggles here. They would have already entered. They are not patient and they enter short. Okay. And then they likely just get absolutely stopped out here. So now we just closed through everything. And we actually inverted this entire. All of these fair value gaps got inverted. I'd be out. We do not have an entry model. Okay. The 4-hour and the 15-minute were aligned. The 1 minute is where we get the sniper entry, and nothing gave it to us. So we have to wait. Yeah, like I wouldn't, we're way too high up here. Way too high. If I want expansion lower, I want a quick retracement and then a flush lower. I don't want to be dancing up here close to the high. Okay, so we get another drop here. Want to wait for some sort of closure below, but really we're just accumulating. I mean, this is just a long, choppy range of accumulation. This would be a very unfortunate area to be trading, which is why we would not be in a trade here. Yeah, as you can see, we blast through it. So the previous highs were up here. So let's see what happens. And by the way, we've already created new 15-minute candle here. Okay, so here, okay. So now we created a new 15-minute that did what we wanted. We had no entry on the 1 minute, so we didn't take anything. We just went back up to the 15-minute to see how the higher time frame candles were closing. As you can see here, the 50% of this candle didn't hold. We closed through it. I don't want to see that. But what did this candle just do? This is the new candle 2. Okay, so now we have a new candle 2. Let's go here. We'll go back down to the 1 minute, and now we're going to look for the new model. So let's see what happens. Ideally, we see some sort of maybe retracement back through here. That would be nice. So we didn't get up into here yet. We haven't touched the 50. We do have a candle 2 here. All right. So what made this high? This green candle? Did we close through it? Yeah, we technically did. So technically, some people may want to short here. Would this be your high? No. Bare minimum, this should be your high. But if you were to get stopped out here, it shouldn't surprise you either, because really, remember, we want to be using the higher time frame highs that we were working off of. This is why so many people get stopped out. All right. If somebody were to argue this, fine, fair enough. Because I tend to agree if we were to close above this and invert this, I wouldn't want to be in this trade anyway. So up here might be a stretch. Maybe you want to just go above where we would invert it. That's fine. Expecting maybe we're just going to sweep this, get back up into OTE prior to move lower. All of that I think is fair. You then need 2R, which is fine because we have liquidity down here. We're not even there yet. So, you would want to see how price reacts to this. This would be your break even. All right. Let's see what happens. So as you can see, this still wasn't touched. Like at this point, this is actually when I would be changing my stop loss. I'd 1,000,000% be doing this. I mean, if people even did this, fine. Again, maybe you just go above this fair value gap. Because if we invert this, then yes, that's absolutely bullish signature. We haven't cleared this yet, so there's no point in going break even. Okay, we clear this. You should be break even now, especially because you get this what? Strong candle to rejection. Okay. Maybe all we needed was this liquidity prior to trying to go back up here. Doesn't really align with the story, with the thesis we had earlier, but again, we'll see if this trade ends up playing out. And as you can see, fairly easily, we clear that out. And then what do? We go and actually get that liquidity that we expected. So this is how it all works. If this helped and made sense to you, please consider liking and subscribing. Again, a lot of people want to use the 1 minute time frame and they just don't know how to use it. They end up getting stuck in the chop. They get stuck in the noise. And when you align the 1 minute with the 15 minute and the 4 hour, you eliminate much of the noise. So I hope this was helpful.